Uh, the U.S. went through a very similar problem many years ago. I grew up in a savings culture. By 1975, we still had a 17% savings rate. But well after the safety net of Social Security in the 30s, and after the Medicare and Medicaid safety net of the very early 70s. But it was not really until Philip Kotler's Principles of Marketing and Marketing Managed book came out and advanced a new science and practice of marketing that the marketing push took off in the US. Universities created departments, a academic discipline of marketing developed with science and practice. Many marketing managers came out of the schools and were absorbed by consumer companies throughout the United States. And companies made vast investments in marketing research, in branding, in segmenting the market into target segments, into positioning their companies competitively to target segments, in promoting the brands through repetitive media promotion, through pricing, the freedom to price products, through consolidation and sophistication of distribution and retailing, and finally through sales management, which finished the purchase process and finished the cycle of marketing. So a vast enterprise-led marketing really built consumerism in the US. Now it built it to a unregulated and disastrous degree, but Chinese regulation and the Chinese government culture is certainly strong enough to regulate the momentum of marketing and keep it within limits. But we're still talking about reducing a 47% savings rate to somewhere in the neighborhood of half of that. So of half of that, trillions can be spent in the domestic market to build a domestic economy that is sustainable and defensive against declines in export. Now, the real questions that come up are this for many of you Chinese companies in the audience. The foreign companies know how to market, and they have the deep pockets to invest in product development and promotion and branding and all the things that it takes to pummel consumers to part with their cash and spend for perceived value to meet their desires beyond immediate necessities and immediate pleasures. In other words, to buy for aspirational purchases and build the tremendous consumer growth that China needs. So we have really the challenge of whether Chinese consumer companies and their government support can have the will and means to compete with the foreign know-how in marketing to help to get its share, its China share of domestic consumer growth. So we have many challenges, and the key thing to keep in mind for this meeting and for all of you is that this indeed is the year of marketing. It is marketing that is the horse that leads the cart of savings reduction and consumption. So I wish you all the time to deeply think about this and plan your strategies and fortify your companies to make the investments, find the talent, cultivate the talent. And this goes for the universities in China to create the discipline and the graduates to manage Chinese enterprise marketing. Thank you and have a very good day at this meeting.